It's time now for Channeling Futures. Here's Abigail Doolittle. And Abigail, well, stocks flip-flopping around, but even so, commodities solidly lower. What's behind the underperformance?
You know, Caroline, you're right about that. We do have the Bloomberg Commodity Index down far more than stocks have been at any point this day. And this really has to do with oil. Take a look at the Bloomberg Commodity Index there, down 0.3%. At the lows, closer to down 0.7%. And there's crude oil down 2.2% off the lows, though. At the lows, down more than 3%. At that point, on pace for the worst day in about a month, presumably on the same news that stocks are trading off, the possibility that maybe the mini or the phase one trade deal has a little more work ahead. We see copper just up slightly, and all of this as the Bloomberg Dollar Index is also slightly higher. It's been a while, though, since we've taken a look at a longer-term chart of the Bloomberg Dollar Index. Actually, this is the dollar index, and we see over the last couple of years a beautiful uptrend. The buyers very much in control of the U.S. dollar, above the 200-day moving average in yellow, the long-term bulls in red or pink. We have the near-term bulls. That's the 50-day moving average. Today, though, and on the recent weakness, we see the dollar index flipping around that $50 or that 50-day moving average. There is some reason to think that we could see a test of support below 98, the top of what's called an ascending triangle, maybe even to the bottom of that range below the 200-day moving average. But net, this chart right now looks like there could be more medium to long-term upside, but in the near term, perhaps a bit more of a cooling off for the dollar. Should that occur, Steve Sosnick of Interactive Brokers, you would think it would be bullish for the commodity complex, but you're bearish on oil. So talk to us about if you think the dollar could go in a little bit more and why the oil might go with it.
Well, unpacking it a little bit, you're right. I mean, if the dollar weakens a little bit, that should be good for commodities. They tend to move inverse of each other. But the only one that I find really, day-to-day moves like that tends to be gold and the precious metals, which are sort of alt currencies. This is a little bit different. And what I don't like about oil right now is we've had various scenarios that should have led to what, if I told you that they took out a big piece of Saudi oil facilities and the rally lasted 3 days, there's something not adding up, which means that if things don't rally when they're supposed to, they usually sell off.
Yeah, so maybe this speaks to the technicals. Let's take a look at your chart here. And that, if we were looking at an ascending triangle in the dollar, we're looking at a possible descending triangle, at least the way you have it drawn here in oil.
There's always a million different ways to draw these things, right? But, I mean, if you look at it, we were pretty much in this descending pattern. This, of course, being the attack on the Saudi oil refineries. But we really have held support, and you can see this was a very fleeting rally. And actually, there was some feeling that somewhat this was because there was a rogue trader actually out there. It's unproven, but somebody lost big. But that really didn't last. And when you can't hold a rally, here was where they attacked some ships, some Saudi tankers. None of these things are moving the oil market up. When things don't go up when they're supposed to, what's your alternative?
So you think we go below 50 then, so you would probably recommend selling the futures outright, but something that we are trying to educate our viewers on, there are options on many futures contracts, including the oil contracts. So this is I don't want to say a safer way, but less capital output.
It's risk controlled. In this case, your maximum loss is the premium you put up. So what we were doing would be buy the December 51 puts, which in oil markets means they actually expire mid-November. It's the option on the future. So there's a little confusion there. And I would sell the DEES 45 puts, because you could see in the chart that was some longer term support. And basically you just want to defray the cost because the vols are pretty high right now. So it's not a cheap time to buy options,